Here we are, Statement of Cash Flows, Cleveland Cash Flows Direct Method. Here's where we left off. We left off with our cash paid for taxes, which I realized I skipped a letter in the alphabet here and made that a K when it should have been J. So we'll just continue since this is a video. You won't be looking at it again and saying, what happened to J? I left it out. All right, that'll mess with me, but we'll try to make sure I don't get too off kilter. All right, so there's where we stopped, cash for operating activities. Now, we're done with the operating section. We haven't cleared everything off this income statement, but what we're actually going to do now is we're going to look back up at the income balance sheet, because now we're done with the operating activities. So if I was to look at just to see, verify, that's an operating activity, that's an operating activity. Everything that we've cleared out was an operating activity, okay? So we didn't clear out the building, it just didn't change. So now we need to think about investing activities. So that's going to be all of these other asset accounts are going to be impacted or related to our investing activities. So let's think about what are the cash flows associated with each of these. All right, so I'm looking at this short-term investments, and we have a change of $10,000, and I don't really know what that is unless I look to the general ledger detail. Okay, so in the investing activity section and the financing activity section, we're going to use the general ledger notes and our balance sheet and our income statement to figure things out. Okay, so looking for any type of information about a short-term investment or an investment. So item number 2 says the company purchased 3,000 shares in December 2012 for $10 a share. Item 3 says they sold 1,000 for $14 a share. All right, now you remember from chapter 12, when you sell the shares, they're going to come out at cost. So that must be what that $10,000 decrease is related to. But we need to keep in mind about the fact that they actually sold them for $14 a share. So let's see how that $14 a share is going to come into play. All right, so this is going to be my item L. Oops, L here, since I skipped J. I know that there was a $10,000 credit. If I look at the income statement, so we sold them for $14,000, we bought them for $10,000. Lo and behold, there we have a gain on sale of investment. So I'm going to label that L. I'm not really going to move it or anything. I just want to recognize that I've accounted for it, if you will. I've done something with that number. So now I have a credit of $4,000. Up at the top, I had a credit of $10,000. This was all related to sale of those short-term investments. So that's going to kick off my investing section. I'm going to call this proceeds from sale of short-term investment. Right, and that's going to be a debit, and it's going to be for $14,000 because that's what I need to make that all balance, and that's what I know from the general ledger detail to be true. Right, it said I sold 1,000 shares for $14 a share. Okay, so that was L. That takes care of one more item. Okay, let's go ahead and take care of this. The fair value adjustment on the securities that I had left at the end of the year. I'm going to call that little L star because it's related to those. Whoops, L star. All right, again, I need to look at the general ledger detail just to confirm what this is about. So if I look in the general ledger detail, I would find that fair value adjustment account. There would be an entry, and I look back into the entry, what I would find is that at the end of 2013, the shares still owned were trading for $9 a share. They were purchased for $10 a share, or and now they're at $9 a share. So that tells us there has been a loss. So that's the credit that occurred in the fair value adjustment account. You remember from chapter 12, the other side of that fair value adjustment would have been an unrealized holding loss. This will say on short-term investments if I had it spread out where you could see it. All right, so there's, again, I'm not going to do anything with that 2,000. I'm just recognizing that it's accounted for. Remember, this didn't have anything to do with cash, so there's nothing to write in our statement of cash flows related to that fair value adjustment. I'm simply just kind of cleaning up these changes. All right, so now I'm down to item M, land. Looks like it decreased by 50,000. Now to make sure it's not a combination, purchase and decrease, I'm going to look in the general ledger. I look in the general ledger detail, this is what I would have found. I've made myself some notes. Just like I'd have to give you notes if on a test. The company sold land with an original cost of $50,000 for $58,000. So there you go. We sold land with an original cost of $50,000. We sold it for $58,000. So this is going to be the cost of the land that was sold. If I look on the income statement, I should see a gain, and I do, on the sale of land for the $8,000. Because remember that general ledger note says it was sold for $58,000. So down in my statement of cash flows in the investing activities section, I'm going to have another line to describe the proceeds from the sale of the land. My cash went up by $58,000. All right, so now you can see how we're doing this, okay? There wasn't any change in the building, which is good. Hopefully that means the only change in accumulated depreciation was more depreciation. That's going to be my item N, and I'm just going to verify that that indeed is the building depreciation on the income statement, thankfully. So that takes care of that. You know, that had nothing to do with cash. And then equipment, I have an increase of $120,000. So here I want to make sure that there's not more than one thing going on. So I'm going to look at the general ledger again to see what happened with the equipment. And here I see that the purchased equipment for $125,000, and here I see we sold equipment. We sold equipment with an original cost of $5,000 and a remaining book value of $2,000. Let's deal with that piece first. Okay, so the sold equipment for $1,000 cash, that pretty much tells us what goes in the statement of cash flows. But working through our worksheet, we need to account for all of that. So original cost of $5,000 and a remaining book value of $2,000. So it had an original cost of $5,000, which means $5,000 came out here, and this is my item O. It said it had a remaining book value of $2,000, which means cost minus accumulated depreciation equals 2. So that means accumulated depreciation must have been 3, right? You remember that from chapter 11? Yes, you do. All right, and so I have a $5,000 in the credit column. I have $3,000 in the debit column. Looking at my, it had a book value of $2,000. We sold it for $1,000, so I should see a loss, and there it is. That's my loss on sale of equipment. But I sold equipment, so that brought me some cash, albeit a loss from sale of equipment. This is going to be the $1,000 it takes to make all that balance. All right, but I'm not finished explaining my changes in equipment. So let's go ahead back to the general ledger. We bought equipment for $125,000 and paid cash. That's convenient. So this is going to be my item P, taking that from the general ledger detail, I know we bought equipment for $125,000 and paid cash. My statement of cash flows, then that just becomes a purchase of equipment. This is item P. This is 125. Let's just make sure that we don't have anything else going on. Accumulated depreciation. The equipment, 18,000. Just to verify, that should be the depreciation of the equipment on the income statement, and it is. And then we should only have, yes, the change in our patent. That should be the amortization on the patent, okay? So now you can hear me say, you know, that should be this and should be that, and that's where you should be at this level in your understanding of these accounts. You know what makes the patent change. So now I have taken care of everything on the income statement. Remember, the patent doesn't have any, that amortization doesn't have any cash impact, so it's not going to change my investing activities. I think I've explained everything. There can't be any investing activities in the liability or equity section, so we're done with our investing activity section. Cash paid for investing activities. I'm just going to guess it is a negative. Then I just thought of something I should change. Get my Amtrak rewards from when I took a train ride. Okay. This should actually say cash from operating activities since it was a positive number. Cash paid for investing activities, negative 52,000. All right, all we have left to do are the financing activities. So let's take a break and we will come back and do that in just a moment.